Yeah, you kind of touched on it already. It was just about how you think the Seritage situation is going to play out. Obviously, some developments over the last 2 or 3 weeks.
Yeah, it's a little hard to know. There are some risks, so things could go wrong. I think it's well known now that they're trying to liquidate, and the new CFO who was appointed is a professional real estate liquidator. So they have a internal portfolio of about 100 or about 10 million square feet. I think it consists of about maybe 70 different properties of the 170 that were already going to be liquidated. So it's hard to tell, are they just trying to sell these? I mean, we know, I think they'd be willing to sell the whole firm. I think they'd be willing to sell a lot of assets. So we're not sure if the whole firm gets sold, or if certain areas, or they've sort of bucket them differently. Those areas could also be sold. So they could sell they could sell it in many different ways. The bigger fear, I think, is that you get somebody. The bigger fear is you get somebody like a Lampert who could potentially come in and underbid the current market price and say, well, if nobody buys it, I'll pay this much, and that could actually drop the price, and then it could get sold, and that would be a real shame. So hopefully something like that does not happen. I think that's the biggest risk, is that somebody underbids the market. I don't expect to get full value for it. I've done some presentations where I've shown that it's about $26 per share. I think today it's selling for around 13 or so. And I don't think that anybody's going to come in and bid twice as much the equity price. So maybe it gets sold for somewhere in the teens. The other risk, by the way, is that they don't find buyers, and that concerns the market. And if that happens and it looks like there's a cash flow risk, you could see the shares drop a lot. And if they really can't get capital, then they need to dilute at probably a poor stock price. So it's not without risk, but I do think it's a very good opportunity. I expect I've valued these properties. There's 170, and I've looked through every single one carefully, gotten a value for every single property. And so if you do sort of a sum of the parts NAV analysis, you certainly end up in the high 20s per share. So you could end up with a bunch of strategic buyers who want these properties to come in and take ownership. But if they expect there to be a liquidity event that could push them toward a bankruptcy, they won't bid, they'll just buy it out of bankruptcy. So that is some of the risks, some of the challenges. But I actually think there's a great opportunity. I expect a bunch of these to be sold for a very reasonable price.